Welcome to the 11th episode of Junto Club. On this episode, we welcome our first guest, C. He talks with Matt and Shu about what constitutes money, encryption, and Bitcoin. I sit quietly by and Google encryption algorithms. For any questions, comments, or to sell us on your new cryptocurrency, email juntoclubpodcast@gmail.com. This is Junto Club.
Junto Club.
Welcome to the 11th episode of Junto Club. Today we welcome our first guest, C. So the Junto Club is based on Benjamin Franklin's Junto Club from, like the 1770s, 1780s, where a bunch of upper class people got together and discussed philosophy and life's great questions. So we discuss philosophy and bettering ourselves and a bunch of news stories that we find interesting, and try to do the best we can to make sense of life. So
nice. Also, correction, it was 1727 that he started it.
Did he start it like birth?
No, I think he's 1727. He was like 20 something.
Oh, okay.
Right?
That's right. He did live to be quite old, right?
Yeah, I mean 1776. Next independence, right? Which is like he was like 80 already.
Oh, okay. I didn't realize he was that old.
And that's the only reason he was not a president, right?
Oh, okay. Fair.
Yeah. All right. So that's good. So I guess so the reason I want brought on C is because I feel like you guys, Mike and Matt, have been changing my views a lot now after talking to you guys for like 3-4 years. And one of the things that you changed my view on was like gun. I guess the notion of a gun doesn't kill people. People kill people. In the beginning I was like, this is a stupid. Of course, people kill people, right? I mean, gun kills people, right? But somehow over time, I think my view has shifted. So I brought on C to, change my view back, I guess. So C, what do you think? What's your view on that quote? Like, gun doesn't kill people, people kill people.
Well, obviously, people kill people. Guns aren't sentient, so we don't have to worry about that.
Okay.
Guns does enhance the ability to kill another person.
Okay. So, that makes sense, I guess.
These are pretty objective facts that I feel like no one can, disagree with. So.
Okay. I guess in the beginning when I first listened to, first time I heard it, it was from maybe NRA, right? The National Rifle Association. So I think because they were from the right, maybe my reaction was like, oh, that's stupid, right? That's really stupid. I guess I did not think really like deeper, right? So yeah. Anyway,
you're talking about with respect to legislating gun regulations.
No, I'm respecting too. Now, I think first time I heard that saying was from people on the right, very conservative people like NRA. It's almost like their propaganda, and they all keep saying that. So I think because I don't like NRA, that's why I kind of object to that saying, right? I think, oh, that's a stupid saying without thinking more about it, right? Does it make sense?
Yeah, I think so.
Anyway, so we're going to talk about guns in the future, not this time. So next week, we're going to talk about actually Bitcoin. We're going to do a shallow dive into Bitcoin and cryptocurrency. But before we go to that, I guess there's a news that I want to, I heard it on Wait, Don't Tell Me. There's a very cool news for me personally, which is, have you guys heard about Harry Potter and HBO? He's talking about joining force and making a series episodes.
I had not heard of that. So they're going to do like a Game of Thrones, but for Harry Potter?
I think so. I hope so. I think we talked about it before, right? That would be really cool if they start doing that, right? So
yeah, like every book becomes a season, and you can actually like get all the material out there. It's free money. Like whoever makes it's gonna like have so many people watch it.
Yeah.
Is it deviating from the books though, or is it just like redoing the books?
I think HBO generally follow the book pretty closely. So, yeah.
See,
Anyway,
did you read Harry Potter?
I read 4 of the books.
And you were able to stop reading them. You weren't invested, huh?
No, I was actually really into it, but I think there was a long time between the 4th and the 5th book. And so by the time the 5th book came out, I had kind of forgotten a lot of the plot points and a lot of the characters. And I just couldn't be bothered to go back and reread it.
He's not a true fan.
It's not, but it's okay. Why read anymore? HBO will come out with a show and you can just catch up with that and finish the story.
That's right. Yeah. I feel like I wouldn't consider myself a true Harry Potter fan, actually. Because, like, when I was a kid, like, I read every book in a day. Like, I read all the books. I went to, like, the midnight releases of the books. I read each book, but I read them once, and now I'm like, I don't care if I ever deal with Harry Potter again. Like, like I'm fine. It was like, okay, that was, like, fun during my childhood. It was interesting, but it's like, it's enough.
Okay. All right. Fair.
So.
All right. So, well, let's talk about Bitcoins, and I guess what do you think of? What do you guys think about what's happened recently? Like the last couple of weeks about with Bitcoin going really high, and then also what happened with Dogecoin?
I mean, I am just very, very pissed. I didn't invest everything I had into Bitcoin when it was like $4,000, but
yeah.
Well, was there something specific that drove it? Because remember how like a couple years ago, Bitcoin surged up to like tens of thousands before, right?
Mm-hmm.
And wasn't that
Tesla just bought like $1.5 billion of Bitcoin. So that probably has something to do with it.
Okay. Because I know in the past it was when it opened, I think China opened up to buying Bitcoin, and that's when like a big flood of investors kind of like surged it, right?
Mm-hmm.
In like 2018, but this time it was Tesla kind of kicked it off.
Yeah.
No, Tesla did not kick it off. What happened already? Like before Tesla is already around like 30, almost like 40K, right? Before that, what happened was the institutional investor, like for example, the Square, Jack Dorsey's company. Well, I mean, this company like PayPal, all these like institutional investors are getting into it. This is big corporations and like banks and stuff. They are actually buying up a lot of the Bitcoin, so they're pushing those up. I think also there's something to do with the pandemic. Maybe a lot of people are like with a lot of disposable income, right? Like a lot of money having like, oh, I have $1,000 stimulus check. Let me put it somewhere. But mostly, I think it's institutional investors are pushing it. And then last week, Tesla, of course, bought in as well. So that's why they push it to like 45, 47K right now. Yeah.
How many Bitcoins
so
do you
that
have?
means for me personally, it was like, me?
Yeah, you. I know you have some.
Oh, I only have 0.01 Bitcoin.
That's okay.
So basically, for me, it was nice. So for me, it's like 45K, like 40K mistake, right? Because looking back, like, and a year ago, it was like 3K. I was thinking of maybe just put 3K in, and then, but I did not. But however, I was looking at, but however, I'm seeing it as a mistake. I'm committing a very common mistake, which is called resulting, which I think we talked about before, right? Resulting basically is, I got it from a book by Amy Duke. She's a very famous like poker player champion. Her book is called Thinking in Bets. So one idea I got from her book is something called resulting, which means a lot of times we looking at outcome, right? We make a bet and we're looking at outcome. If the outcome is good, we always say, oh, I made a good decision. And then if the outcome is bad, and we think, we always thought, oh, this is a stupid, bad decision. But actually, we are committing the mistake of resulting because we are not separating the result from the decision. Because sometimes you make a decision, the outcome could be bad, but the decision could be still good, right? So the reason that we did not, like, for example, the reason that the decision of not investing in Bitcoin like when they were 3K, it could still be a good decision because with the information at that time, right? We just cannot predict what's going to happen in the future, right? But it could still go to zero, right? So you never know. So I guess this is just something that I got from that, thinking about like was the decision good or bad for not investing and stuff like that. But does it make sense?
Yeah, no, that's a good thing. People, it doesn't get brought up a lot, but yeah, just because you say win the lottery doesn't mean it's actually a good idea to buy lottery tickets, right? That's like the simple anecdote of that idea.
Yeah.
Right. So what you're saying is like I probably did okay by investing minimally in Dogecoin rather than putting my life savings into it, right, Shu? As much as I want to put my life savings into it.
Wait, did you call it Dogecoin, not Dogecoin?
Or whatever, DOGE?
I thought it was Dogecoin.
I thought it was Doggy Coin.
That makes sense to me.
I've heard of it as Doge. I haven't heard of anything else.
Okay. Somehow I thought it's Doge. Okay, Doge, good. My pronunciation is corrected again. So looking back, I guess looking at the decision, so what is the lesson from there? So I guess from that lesson, for me, the right lesson is like, I guess I do make a mistake. I did make a mistake. The mistake was I did not try to learn, try to understand Bitcoin, what's behind Bitcoin, the blockchain stuff, what's the technology behind it. And at that time, I did not like look into it. I just ignore it in a way, right? So I think that to me, that is a mistake. I'm not studying it more closely. So that's why I want to, study it right now. So that's what's gonna happen for this podcast. Yeah. Well.
So I'm not an expert on this, but isn't like Bitcoin was the first, but isn't it kind of like a bad cryptocurrency? Like my understanding is like since Bitcoin, there's been much better technical implementations. And like Bitcoin has like a lot of limitations, like the number of transactions that can happen a second is really low. But, because it's the first and it's got the name, like that's why it grows, right? So like arguably, like looking into the technology might have said, oh, these other coins are better bets or investments. But is that accurate with what you got? No?
No. It's like actually, Bitcoin has it has the technology behind it. The blockchain is I think it's very, very good. And a lot of these coins, all the different implementations are like derived from it, but they make things easier somehow. But those doesn't necessarily make it better. I mean, better in different ways, I guess. But I think you specifically you mentioned about transactions, like very slow, which is fine because it depends how you want to use Bitcoin. I think a lot of people, the consensus that Bitcoin is not going to be used as a medium of exchange. You're not going to use it as a money to pay for anything. It's going to be used as a store of value, right? So that's why you're gonna. So that's why it's keep going up because people are believing it, seeing it as a store of value. It's not going to be using it as like traditional money, like to pay to buy stuff, basically. Yeah. But we're going to go into it, some of the technology behind it. So to study Bitcoin or cryptocurrency, there are, basically two basic fundamental things that we need to understand, right? So the first one, it's coming from the name, like cryptocurrency. So we need to understand what is currency, what is money, right? And what is crypto, like cryptography. So these are the two fundamental things for us. And it's for me to understand in order to understand Bitcoin, basically. Yeah. So do you guys have any thoughts on what is money?
Money is a tool used to exchange goods and services. That's my thought on money.
Yeah. It could be. Yeah. I was going to say basically the same thing. It's basically an agreed upon something, like physical virtual object that carries some value, and that value can be exchanged for goods and services.
So this actually makes me think of something, because I think you know where you're going with this, but if you say Bitcoin's a store of value, not like a unit of exchange, well, like I guess this goes into debate, is gold money, right? Because there's a semi-famous internet meme when like Ben Bernanke, who's like the chair of the Fed, he was like, Ron Paul was like, is gold money? And he was like, no, it's not money. So by that same logic, wouldn't Bitcoin not be currency?
Maybe. What about C? Do you have any thoughts on that?
My thinking is in line with everyone else, it seems.
It's really?
like you said, right? Like Bitcoin right now is an investment vehicle. It's not a currency. So.
Okay. So what is money, right? So for that, you really need to look into the history in a way. So in the early days, at the caveman days, right? The money, the first money was like, a lot of people just using like cowrie shells, right? Like anything basically like for exchanging stuff, right? So they just use like anything that is rare, right? Objects that people agree on. Okay, this is money, right? This we're gonna pay how many shells, gonna pay how much, right? To exchange stuff. And then I think one of the early forms of money was just like barley, grain, right? Similar to rice in a way. Actually, people just carry those things around to exchange stuff, and those are very hard to come to. I mean, it's really hard to transport, right? So it's not very convenient. So then you come to of course, coins, right? And then which is backed by the government. The king basically manufactured these coins, so people can use that to exchange, buy stuff, right? So money actually, from my understanding, from the actually I derived this from the book called *Sapiens* by Yuval Noah Harari, and it's a very good book about talking about history of mankind. But one chapter is about money. So basically, what he talks about money is actually money fundamentally is something called trust. It's trust. It's what people believe in. He call it's a figment of imagination, right? Human just made it up. It's a concept. It's idea. It's nothing. So it's fundamentally. So that's what it is. It's trust. Like people believe in this is how much it is, right? So one thing that the trust come from different ways, right? Come from government. So for coins, right, it comes from the king, right? We believe in the king that made this coin, right? So we trust that this is how much it's value, right? The U.S. dollar, we trust in the government, right? So that's why the U.S. dollar is very big, because most people trust in the U.S. government, right? Yeah, does that make sense?
Yeah.
So for me, I think that's very key to understand the implications of blockchain and cryptocurrency technology. So going back to the history of money a little bit, we need to go back in the 1700s, the U.S. paper money. Do you know how paper money in the U.S. got started?
Nope.
I mean, I'm going to give you a hint. Who started the paper
Benjamin
money?
Franklin?
Of course, who else? No, Ben Franklin. That's why we are here. We are here to celebrate Benjamin Franklin. And so he's everywhere. He has hands on every single thing. I think that's why he's on $100 bill. Right? He basically started in U.S. paper money. So think back when he was 17 years old, right? When he come from Boston to Philadelphia. So when he was 17, I think he walked in the street of Philadelphia. He was seeing a lot of houses are actually boarding up, right? Like the houses a lot of business are really ran down. It's really the economy in Philadelphia was really stagnant, right? So the reason of that, cause of there's a shortage of coin from England, right? So I think the UK government, the Great Britain tried to kind of constrain the coins in the US. So kind of try to, make them dependent on UK, basically, kind of in a way. So I think from that, then fast forward maybe I think a few years later, Benjamin, when a lot of people are talking about whether we should start paper money in Philadelphia, basically Benjamin Franklin jumped on the train, just actually wrote a paper article, published a paper saying, hey, we definitely need to support paper money in Philadelphia. That way you can boost the business, basically. He actually debated that issue in his Junto Club. So he actually debated that in the issue with other members of the Junto Club. So anyway, so I find that it's a very interesting history a little bit. So yeah, so that's what he did. So, but conveniently, to make paper money, someone needs to print it, right?
Mm-hmm.
So do you know who was the only printer in town?
Benjamin Franklin.
Yes. Exactly. So basically he made a lot of money, got really rich by printing a lot of money, and then he was able to retire in 42. So yeah. So I don't know what's going on there, but anyway, he's a very good businessman, I guess. So from Philadelphia, because he has the technology to print papers, he also makes it such that it's very hard to counterfeit. The way he did it is like using something like a very rare like leaf pattern, right? He put that pattern on the back of the paper money, such that it's very hard for people to copy, right? To counterfeit. So that's one innovation that he did to prevent counterfeiting. Because money basically it's almost like information. If you need a way to basically make it harder to copy, right? So that's kind of related to Bitcoin, like too, right? Bitcoin, one of the challenges with currency, you need to make it secure, so it's hard to duplicate, right? But anyway, going back to my history a little bit. Yeah, so after he done that, he became really successful. I mean, other states, right, cities like New Jersey, also asked that Benjamin Franklin print money as well. So he printed most of the paper money in the U.S. during like early colonial days. So I think that's why that's one of the main reasons that he's on the $100 bill. So yeah. Anyway, how's that as a history lesson?
I feel like this one, I don't know, he's influenced a lot of how we live. And I feel, as you say, like when the country actually started, he was like in his 70s or something. So
yeah,
it's impressive. So
yeah. Anyway, so that's one reason he was able to retire in 42, and then do everything he wants afterwards, right? Science and stuff, experiments and stuff. Yeah.
Right.
Cool. So basically, in summary, I guess the lesson from that is that the main point for that is the money is a trust. It's kind of information. It's a record of something, of information, right? So and everybody that trusts that information, and so yeah. So I guess right now, it's very similar to the technology that Benjamin Franklin used, is the printer, right? Because it's very few people has printer able to do all that kind of stuff. And then that's the technology he used back in the day. But this time, right now, the current in modern days, the technology equivalent behind Bitcoin is the blockchain, of course, and cryptography, right? So do you guys know anything about cryptography?
I do not. I read the Bitcoin paper once and got like a half understanding of it, but not very familiar.
Yeah.
All right.
Yeah, I have not looked into sort of doing cryptographs very often.
That's good. I actually read the paper this morning again, because similar to you, Matt, I read it like a while ago. I did not really get it, but I feel like the understanding of, because in the beginning of the paper, you talk about like trust, about like the money system, stuff like that. So that's why it was a little bit confusing, because I didn't really know understanding what is money and what's the whole point of Bitcoin, right? So once if you understand it's just a trust thing, I think that helped me understand cryptography. I mean, Bitcoin, the paper, but also because I also dig into a little bit of literature on cryptography, so I have some basic understanding. So next step is cryptography. So what is cryptography? Cryptography basically is a what do you call that? It's a science of basically hiding information, right? To make it secure, right? So one way is like hiding is very similar to like prevent counterfeiting, right? Is you need to make it such that it's hard to be tampered with, which is like cryptography. You can use cryptography to do something similar, right? To make the information secure. So a little bit history of cryptography. Have you guys heard of the Caesar cipher?
Caesar cipher.
That's the rotating cipher?
Yeah, exactly. So it's to basically just think about alphabet, right? You roll a letter, right? How would you like encrypt it, right? So Caesar cipher basically it's an alphabet, right? You shift the alphabet. So for example, if you shift the alphabet like 3 times, right? That means like A will be replaced with C, right? And then B will be replaced with D. So basically you do that with all your letters, and you will come up with an encrypted. The output is an encrypted letter, right? Text, yeah. So that's the one way. That's what Caesar cipher is. One of the earliest version of like encryption cryptography, right? And it's very easy. It's very easy to break it because all you need to do is just keep trying the number of shifts, right, in the alphabet. That way you will come up with you will break it very easily. Right. Yeah. So, all right. So now going back to that's Caesar time. So let's go back to American Revolution again, U.S. Revolution during that time. I mean, we have talked about Benjamin Franklin again because he was also using a lot of cipher for his communication during that U.S. Revolution time, right? And another person, George. I mean, a lot of founders use it. Like George Washington, he's a big fan of something called invisible ink. So he liked to write his message in invisible ink and then send it to somebody else. And then the other founder actually is Thomas Jefferson. He invented something called Jefferson wheel. Have you guys heard about it before?
Mm-mm.
All right, that's good. So Jefferson wheel. I mean, he invented it when he was president, so that is impressive by itself, right? I mean, just think about the current president now. Which president has the ability or intelligence to do something like that? So anyway, he does a lot of stuff like that. Yeah. So basically, with Jefferson wheel, it's wheel because it's very similar to Caesar cipher. So Caesar cipher has a one alphabet, right? A, B, C, D, right? Sequence. So Jefferson wheel has actually turned the alphabet on a wheel, right? On the edge of the wheel, right? And it's also randomized. So instead of having an A, B, C, D, it's all randomized, right? And you stack multiple wheels together, which is I think Jefferson wheel used 36 wheels, right? And then each wheel has a number like 1, 2, 3, 4, 5. And how you stack it is the key, right? For example, if you stack second wheel first, there'll be 2 and blah blah blah, right? So that's the key for encrypted. But anyway, for encryption, you basically different wheel has different randomized alphabet basically, right? So each wheel has a randomized set of alphabet. So for example, if I want to say, okay, Mike is always late, right? I want to write a message I want to send a message to you guys. What I would do is I would turn the wheel such that Mike is late. The message is appear on the wheel, right? Now I just pick a different on a single row, right? Then what I do is I just pick a different random row on the wheel, which is going to be an encrypted message, right? Because it's random alphabet. So you come out with that, and then using the key to decode that message, basically. Yeah. Does that make sense to you guys?
I think so.
Okay. So yeah, that's probably a very poor explanation, but you guys know Google, so just Google it in the future. So from Jefferson wheel, but I think everybody now we have to move to World War II, right? What happened in World War II of the of encryption?
Enigma.
Exactly. So Enigma machine is actually, I don't think anybody talked about this, but I feel like from my understanding now, like looking at Jefferson Enigma machine, actually Enigma machine is basically just a electromechanical version of Jefferson wheel, right? Electrical and mechanical implementation of Jefferson wheel. That's what Enigma machine is to me. But they also have a key that's such that it's basically scrambles. So whenever you input like a letter, you basically just output a random letter, right? So that's basically what Enigma machine does, right? So anyway, so to me, just another fancy computerized version of Jefferson wheel. So anyway, so that is what encryption is. Now going back now. But all these machines have a single key, right? Everybody share a key such that you can decrypt the message. Now, going back to the modern days with internet, a new invention is something called public key cryptography. Have you guys heard of that? Public key?
Yeah.
Yeah. Okay, cool. So all these single keys are very easy. So if anybody have a single key, right, it's very vulnerable, right? Because net can be stolen or whatever to figure out what the message is. So what public key and private? So private key cryptography basically two keys, right? Instead of single key. So it has a public key which can be shared with everybody else, right? And whoever has that key can use that to encrypt the message that want to send to you. And then they have the person. So have another key called private key, which can use it to decrypt the message. So for example, if I have a public key and I also have a private key. So my public key is public. So Matt, if you want to send me a message, you can use the public key to encrypt it and then send a message to me. And I have the private key. I'm the only one having it. I can open the message, decrypt it using the public key, right? And then another way to think about it, I think is something that I heard recently is very good analogy, is I think about a box, right? You have a box, right? And then you want to put a message in the box, right? So all I'm gonna do is I want to send a message to you. I'm gonna put my lock, right? My lock on the box and then send it to you. And when the box reaches you, you're gonna put your own lock on the box, right? And you send the box back to me, right? And I'm gonna take out my lock on my side and then send the box back to you. Then you can open your own lock, right? So I think that's a very, I'm not sure, at least for me, that's a very easy way. I mean, a clear way to understand. Like that's what private key kind of does, almost in a way.
I see.
Yeah, but that's what enables like e-commerce, right? Without that, e-commerce would be impossible right now. So stuff like that. Anyway.
All right, and that's the last step to Bitcoin, I assume.
Yeah, kind of. Yes. So public key also enables something called digital signature, right? Digital signature. Basically, right now you sign any document, you can just have a digital key that actually matches your digital signature in a way. So that's what what's that called? The cryptography. What cryptography again? I forgot. Oh yeah, the public key cryptography. I'm sorry. So yeah, you have that. You was able to enable digital signature, and digital signature is fundamentally something that uses blockchain, right? So, but blockchain is the newest form of like cryptography, right? But however, it uses modern encryption cryptography. So digital signature, that's what they use to encode the message, like the data information in a single block, right? So they use the public key, stuff like that, digital signature to encrypt the message. And then they also use more than just that. So they use something called proof of work, actually. So proof of work, right? Mechanism is a consensus-based algorithm, basically, that you should be very familiar with. But anyway, so, and also other things is called peer-to-peer network, right? So each node, each computer have a copy of the blockchain. So yeah. So going back a little bit, blockchain basically is a record, right? A record information of like, in an example of Bitcoin is basically transaction, right? So transaction, you store the transaction into the block, right? And the block is a blockchain. It's a chain because each block is connected, right? And then the newest block has information, contain the information from the previous block. So that's why they are chained together in that way, right? Mm-hmm. So that's why it's a blockchain. And then it's a record. Now it's shared by everybody else. It's decentralized. So there's no single copy, right? So it's a network because there's a thousand of computers in the world has a copy of that whole record of like transactions of Bitcoin, right? So everybody have a copy. So what they do, so they use proof of work to update that blockchain, basically, the copy. Like whoever have basically each node just copies the longest chain, right? So that way they use so proof of work just like puzzles, right? Each computer needs to solve some kind of mathematical puzzles, basically computation, right? Around 10 minutes to kind of prove to get that to basically get that proof. Yeah. So those are three key things in blockchain, basically, right? Anyway, any questions on that? I know it's a bit confusing, but yeah.
So I remember just talking about this. I remember I heard once, basically, the idea was you could actually cheat Bitcoin. You could create an alternative history in this blockchain if you controlled more than 50% of the computing power being allocated to it. Because essentially, while computers are trying to while people are trying to compute new blocks and add it to the longest, list, if you just kind of compute your alternative history and then publish it out, as long as you can maintain that computation, you can sort of make this fake thing, and then you can have fake transactions. But I mean, obviously it's not realistic for one person to have more than 50% of the computing power allocated towards Bitcoin. But yeah, what do you think about that?
They try to prevent the So let me, before I go to that, actually, so then the problem they try to prevent using that proof of work is the double spending problem, right? Which is basically the counterfeiting problem, right? People can spend the money, keep spending it, right? Mm-hmm. So now, to your point of 51, yes, that is possibility. That's possible, right? Someone can gain 51% computing power. That way they can actually just hack it, right? Basically. Now, Bitcoin also have something like game theoretic design in a way, right? So if someone has 51% power, would you rather using that to mine more coins, or would you rather use it to destroy the Bitcoin? Which one is more profitable?
That's true.
Yeah,
probably right? Mining, given the value of Bitcoins.
Yeah, exactly, right? So that actually incentivize actually people, whoever has more, to kind of, you don't want to destroy this Bitcoin system, right? Because you got a lot of money from this, right? So yeah. Of course, that's probably, for me, I guess, there's of course counterpoint, which is maybe there's some terrorists or some who just want to destroy the whole world, right? But it might be hard for them to get harness 51% of the computation power.
Mm-hmm.
So yeah, potentially it can be destroyed, but it's very unlikely considering like the game theoretic component of that.
So
Yeah.
why don't you explain what does it mean to mine a Bitcoin?
I'll say I'm not sure. To me, mining a Bitcoin basically is in the proof of work, right? So proof of work, so everybody is compete to solve the problem. You competing with the other to solve the proof of work, basically, right? If you get that faster than the other guys, then you get the coin, basically, right? That's from my basic understanding right now. That's one of my proof of work, because your computer need to do the work to add a new block into the chain, right? That way, that's how the coins got generated. Your reward for doing that is you get Bitcoin, basically, right? You're using your computation to do the work. The reason you want to do that because you want to extend the blockchain always, right? You want because the longer the blockchain, the harder it is for people to attack it, basically to basically tamper with it, right? To go back to change something back in the past, right? Basically, so that's why they want to add the chain. They want the blockchain to be as long as possible. Basically, the ledger, the record of transactions in Bitcoin, they want it to be as long as possible. And then you're mining it by helping the system doing that, basically.
Mm-hmm. So I think we're missing one key thing, because one thing I do know is there's a finite number of Bitcoins, right? Like there's only so many Bitcoins that will ever exist. So you can't surely. So when you're extending the blockchain, you're making the record of transactions and you're basically updating it, and you're doing the computational work to like encode the transactions, right? And like from what I remember from the past, it's like, it's kind of like you have to like find the key in a hash or something like that. Like you're just searching for the solution to something to sort of encode everything into this. And like it just takes time for your computer to search for a solution. And, then the first person who finds the solution can like publish it out, and everyone, you create the next longest blockchain. But those will happen forever as long as people are trading, right? Because they'll have more and more transactions, right? People will continue trading Bitcoin back and forth. So that can't be where Bitcoins are generated, because then there'd be infinite Bitcoins, right?
Yeah, that I'm not sure right now. Yeah, I'm not sure about how that regarding that. So, I think one of the reason I guess I don't know that answer right now regarding mining, right? Yeah. I was just looking into Bitcoin, try to understand the underlying right now. So maybe next week, in the future, we can talk about setting out how can we use our computer to mine Bitcoin.
You were more focused on sort of, I guess, it as a cultural tool rather than like the technology behind it. Is that accurate to say? In terms of like trust and as like an alternative. I wasn't
focused
money?
on mining.
Mm-hmm.
Yeah, I'm more focused trying to understand what is it, and then what's the implication of it, right? Mm-hmm. Like what happened? What's the blockchain technology means for us in the future potentially, right? So yeah, coming back to I guess does that make sense?
Yeah.
Kind of. So coming back to whatever like Bitcoin in the beginning, we talk about like what's the use of Bitcoin, right? So it's a store of value, and also a lot of people are talking about like the blockchain technology or underlying technology behind it, right? So a lot of people like different version of cryptocurrency, they basically have different. They could have a different cryptography. Now instead of digital signature, they could have something else. But also, other coins, then they relax the proof of work, right? So you don't need like 10 minutes to prove this, to solve this mathematical puzzle, right? That's too long, right? So they might use something else to have less constraints, which make it more vulnerable in any way. But yeah, so transaction time. So yeah. But I guess going back to the implication for the future, like blockchain technology, what it means for us is that means it's a future potentially because something called intermediaries, right? Intermediaries. Everybody right now, we have do you know what intermediaries are?
As a concept or yeah, I'm not sure about
that. Yeah, as a concept. I guess as a system that we have currently. So currently we have the banks, right? It's an intermediary between you need to pay something, you have to go to the bank and then pay for someone else, right? Right. We have to go to Waymo or something like that bank, right? And another example, like title companies, right? So you buy a house, right? You got a title on your house, right? But someone else is holding that title, right, for you, which is I think the lawyers or something. So the title company are doing that for you, right? Now the reason we do that because we need the intermediaries. We trust the intermediaries, right? So you have a third party that we trust. They're gonna say, "Hey, you own this house," right? So what blockchain technology implies in the future is that we don't need that anymore because everybody trusts the blockchain. It's almost like again trustless. You don't need the intermediary to trust that I own this house because it's gonna be this information gonna be kept in the blockchain, right? So you're going back to the trust again, right? Another is like contract, right? Because we have lawyers to write contracts for us, right? So we trust the lawyer to do that, right? Using a contract, but we can sidestep that by just storing a contract on the blockchain. But that might not be, as I talk about it, that might not be a good example because I guess we still need lawyers to write the contract for us. But anyway, basically in the future, you can think about all these intermediaries, like third parties. You basically can get rid of those using blockchain, basically. So yeah.
But aren't you talking about currency in this case?
No, I guess right now I'm talking about the blockchain technology, whatever enables the Bitcoin, right? So the Bitcoin has two things, right? One is the technology behind it, right? And that's the blockchain is used to keep the money like Bitcoin secure, right? But we can use the blockchain technology for something else. It's like back in the day, we can use printer, right? In Benjamin Franklin days, we use printer to print the money, right? But we can use printer to do something else as well, right? So I guess that's why I kind of try to equate the technology like blockchain with the printer back in the day. Anyway, and the cryptography is we use similar to what Benjamin Franklin used to prevent counterfeiting, basically, right? Using the rare leaves patterns to print that on the paper money. Yeah.
But how do you access Bitcoin?
How do you access Bitcoin?
Yeah, how does a layman access Bitcoin?
Layman, you can just buy it from some exchange, right?
So you have to trust the exchange.
Exactly. Yeah.
I was gonna say something because I was gonna say something similar because it's not like a random person's gonna set up their computer to try to get the Bitcoin ledger and like do the computations to update it, right? And then hope that you beat other computers and it gets in. Like every time you want to buy or sell, you'll like do this whole process to update your own transaction, right? Like normal people like send their transactions to and then there's like a small set of people who do these computations, right? And I think you have to even pay them a fee. Like you offer a fee to get your transaction basically into the public ledger. So in a sense, they're kind of filling in this third party kind of gatekeeping. It is public, so it's different than having sort of a private company do it behind closed doors, right? It's like public and distributed, but you're still dealing with something similar. If I'm going to continue to be Bitcoin skeptic.
That's true.
We the individual can't actually append to the ledger, right? We don't have the computational power, and Bitcoin doesn't support like everyone appending to the ledger individually because it only supports so many transactions per second. So then you need to like group the individual transactions of buying and selling these Bitcoins into a block, which the exchange does, and then they can submit that. They can batch it basically, right?
Well, yeah, but I mean, think about money, right? Now you got dollar. Now how do you get dollar? You don't print the dollar yourself, right? You just get dollar from someone else.
Yeah,
right?
But I guess
and you don't care. You don't really care about where the U.S. dollar comes from, right?
Well, you don't care because you use banks, and banks are kind of they're established and trustworthy, and they're backed by the government.
Yeah, exactly. That's coming back to trust again, right? It's because you trust it, right?
Right. So with Bitcoin now, you're asking people to trust a different entity that's not backed by the government.
Yeah. If you talk about currency, yes. If everybody believes in Bitcoin, yes, it's going to be. I guess the main point is that what's currency? It's trust, right? If enough people believe in Bitcoin, is going to be.
It's not about believing in Bitcoin. It's about believing in the exchanges that functions as an intermediary between you and Bitcoin.
Exchanges. I'm not sure about that.
Because you don't directly interact with Bitcoin. You buy and sell through an exchange, and then the exchange modifies or appends the ledger to Bitcoin.
Yeah, true. I mean, yeah, exchange may have an incentive to keep. I mean, I guess you don't trust the exchange necessarily. It's like you have multiple exchanges, right? If you don't trust this exchange, it's a third party, someone else help like transfer, right? The exchange, like stock markets, right? You trust the third party to even. I mean, if one exchange goes bad, now you can still always change to another one, right? But fundamentally, you still trust in Bitcoin, right? Because there could be other exchange that, it's more trustworthy than the other, I guess. I mean, I guess I could start today, say, hey, I'm starting a Bitcoin exchange. Just give me all your money, right? So I can send Bitcoin to you, but, right? Anybody can do that, right? So, but yeah, fundamentally, I guess fundamental level, you still trust the Bitcoin, right? I guess, and the trust in the Bitcoin it's not in the exchange. The reason exchange got set up in the first place because a lot of people believe in Bitcoin, right?
In the name Bitcoin.
Yeah. Well, yeah. Fundamentally, if enough trust people, like for example, if enough people trust that Trump is the president, he is the president, right? If enough people trust it, right? If enough people believe in it, if 51% of the country of people believe in Trump is the president, he is the president, right?
The right people believed.
That's not what happened.
Well, that's because not enough people believe it, right? What is actually going back to the trust, like government? What is government? Government just the U.S. Constitution is also a figment of our imagination. It's enough people come together, made it up, right?
I'm not sure I'd call any social construct a figment of our imagination. That doesn't seem entirely.
It is. Social contract is imagination. It's human. That's what humans do. Humans made up all these social contracts, like government, like corporation. It's all belief, right? It's always trust. It's a belief. It's imagination. We made it up basically. It's a concept. It's an idea, and that is what money is. And money is the only thing that actually everybody in the world believes in, no matter your religion, your sexual orientation, or your terrorists believe in money too, right? It's only money is the only almost an implicit coordination that make people cooperate in a way, the mechanism, right? Yeah, because no matter which country you come from, you actually everybody believes in money. So yeah, right.
Now I'm thinking about the people who dig holes in their backyard to fill it with gold because they don't trust, paper money from banks. But I guess you could say they're treating gold like money. So
yeah, gold is money. Yeah.
Well, where we go back to the beginning.
It's store of value, right? It's store of value again.
So
right?
The Bitcoin trust, I feel like there's two elements to trusting Bitcoin. And I think, so there's the trust that technology works well in a way that it can't be like cheated. And I think Bitcoin has that. But like fundamentally, Bitcoin, like you said, it can't be exchanged for things directly. It's not like a stock that potentially has like dividends or something. Like the other part of the trust equation is a trust that you can eventually sell Bitcoin for, more or at least as much as you bought it for, right? And I would argue that that's almost more important than the trust behind the technology because no one's really that concerned when they, buy a stock on Robinhood that, someone's going to somehow cheat and sell two stocks that didn't exist, right? Like I feel like people just assume the systems work well enough, the average person that is driving a lot of these prices. But the real trust is that it will retain its value, right? And that comes from something different. Would you agree with that?
Retain its value. Can you repeat that again?
Bitcoin will retain its value, that you'll be able to sell it to someone else for at least as much as you bought it for, preferably for more.
Yeah. That's what.
So in that sense, that's no different than any other stock.
Well, that's not entirely true because a lot of stocks, a decent chunk of stocks have a dividend attached to it, right? So that in some way grounds them heavily. But stocks that have no dividends and are focused on growth, it is pretty similar to that. But I feel like stocks have at least a few kind of more tenuous things grounding them in a sense to real value. Maybe while Bitcoin, it seems to be more up in the air, I guess. More just based on what people feel, Yeah.
It's hard to judge. So Bitcoin, I think there's a limited supply, right? So you can almost equate it to how much money are in the world, right?
Well, so I think every stock there's a limited quantity of. That's one.
Yeah. Well, yeah. So it cannot go on forever, right? It's at some point it has to stop, right? So, but. A lot of times, stock is psychology again, right? Like a lot of people believe in GameStop, it's just going to dry up. So what happens in GameStop is people lose trust, right? If those people like Wall Street bets, if they believe in that stock, it's going to keep going, right? It's just going to maintain it there, right? But what happens is that last week is that everybody lose trust, right? So they just crumble, right? So,
well, trust here is different than like what you were using it before, right? Like trust in that, like Bitcoin is not, it can't be gamed in a fraudulent manner. In this case, trust in GameStop is more like trust that other people will buy GameStop for more money in the future.
Well, yeah.
Which is the same thing with most, Tesla or like Amazon, those kind of stocks or Bitcoin. It's the exact same thing. It's that you're betting that other people will want to buy in for a higher price in the future.
I see. I think I was coming from the. Maybe it could be the wrong point, but I was thinking of if enough people trust it, they just keep the money in there. They don't need to sell it, right? Everybody's hold, then they should be fine, right?
Well, I think everyone is buying stock or Bitcoin in the hopes that eventually they will cash out with more money. It's basically a Ponzi scheme that everyone's in on.
It is.
Right?
Yeah, it is a kind of thing. Like someone talked about like one person I follow is Naval Ravikant. He talked about like it basically like start with smart people, right? Smart people know about the technology, everything behind it, and they just sell it to other people, and then other people sell it to other people, basically, right? So, but
Right.
I mean, he also made a point like it's a bubble, right? It's a bubble, but money. There's a quote he's saying that like, money is almost like a bubble that never pops, right? So in your sense, like Bitcoin
Until it
could be that
does.
as well, right? What, I'm sorry.
Money is a bubble that doesn't pop until it does.
Yeah. Well, it never pops. Well, sometimes it pops, or it can come back.
That's when a nation fails, basically.
Yeah, because everybody loses trust on the government. Yeah.
Right.
Yeah.
So I think you brought me in because I was telling you about this book, Debt, the first 5,000 years.
Yeah.
And how basically, money it's not just trust, it's also violence. And the way they connect it is that basically whoever has, the physical or military force to compel someone, right? They can say, this money is worth this much. And if you don't like it, we're gonna like destroy your country or whatever, right? And so one of the arguments in the book is that, US dollars is so strong because we are like the world peacekeeper, right? We have military bases everywhere. We are like, our military is so much stronger than like most other countries. And what we say kind of goes. And we are a strong force of like producing goods, and other nations buy our goods, and they they sell us goods, right? And so what happens when they sell us goods is that we buy them in US dollars, which means their profit is in terms of US dollars. So it makes sense for their country to prop the value of US dollars up. Because if US dollar devalues and everyone is holding a lot of US dollars, then everyone loses. With international trade, this is happening with basically every country, right? We sell something to China, we get profit in terms of Chinese yuan. And so it benefits everyone that all the values of, all of the world's currency maintains at a certain level or goes up. And so all the countries are buying each other's debt, essentially. We're all propping up the values of everyone's countries because we want, if one currency falls, it's like everything else falls, depending on how reliant you are on that particular nation's currency. So there is an implicit bias that every other country wants to keep US currency afloat. As long as we don't do something really reckless with it. And the other point that I want to make before this is over is that there is, the idea that US dollars was backed by gold. And so there is like a one-to-one mapping, like gold has implicit value that everyone agrees on. And so there was the idea that US dollars is backed by something that's implicitly valued, but then when we severed the backing of the gold, so now U.S. currency has value by fiat. The government says there is value in this, so there is value. It kind of makes money inherently valueless, right? It's kind of like it's cut its tie from gold, so now it's kind of floating about, and it's whatever people collectively believe on. The value of the US dollars is the value. And in that sense, you can say, US dollars is really valueless. It's just a medium of exchange, right? And so if you think of it in that sense, there is a certain value in the world. And as time progresses, as technology develops, we are producing more valuable things. Computers getting faster. We're getting bigger flat screen TVs, and hopefully like housing will get cheaper, and like farming and food and all these different products. We have more products and they're easier to produce with less resources. And so the value of the world collectively is growing, right? And if you think of money as a mapping of like, say, dollars to certain arbitrary unit of value, if the number of dollars stays the same, then you're going to basically like $1 will be worth more and more and more and more, right? If you want like $1 to some arbitrary unit of value to stay the same, well, as time goes on, we're producing more value. And so there needs to be more dollars as well, right? And so if you think of it that way, it actually makes sense that we just keep printing US dollars, right? Because we're generating more value. So the mapping of dollars to value is constant. But people frown on that. So we just kind of borrow from each other. And so in that sense, it's still okay that we're kind of like collectively just generating money out of thin air, because the value underneath all of that is also increasing with more people and more productivity.
What do you mean by people frown on that?
Like, you know, they always say like, was it like Zambia? Like they had this hyperinflation where they had debt, and in order to pay that debt, they would print more money. And because they're printing money, their money becomes less valuable, and so they have to print even more money to pay off their debt. Right? And so they're worried that if U.S. starts printing money to pay off its debt, then we're going to hit this hyperinflation cycle.
There's definitely, I mean, a point, yeah, where you can print too much money. But, I mean, it seems pretty well established that you want to print enough to devalue the currency just a little bit. So you just have a little bit of inflation, because that kind of incentivizes the right things, right? Like if you have currency that's deflating, it incentivizes everyone to just hold on to the money because it's going to be more valuable into the future. While if it's just, there's a little bit of inflation, then people are incentivized to invest in things like the stock market to hopefully earn more money rather than have it lose value sitting in a bank account. And then when you invest in the stock market, that goes to companies who use it to, you know, build stuff and try to create more stuff and blah, blah, blah. So, yeah, I think like getting that just a little bit of inflation seems to help keep the economy running ideally, I guess.
Yeah.
But it's a good point. I've never really heard someone put it as like printing money in terms of like we all know that like the wealth in the world is, most people seem to agree the wealth in the world is going up over time quite a lot. But yeah, so if you don't print more money, like you'll actually have like really fast deflation where the value of a dollar gets to be crazy, you know?
Yeah. I guess another point that is the violence part of the, like, so money is not just trust, it's also violence.
Yeah, because, you know, how do you keep, or at least as a nation, right? Like, how do you say that this money has value? Because you can enforce it, right? And if someone doesn't take it or whatever, doesn't accept it, well, you could enforce that through the police, through the military, you can throw them in jail.
But isn't it fundamentally because people trust in the government?
Right, but imagine if people are counterfeiting U.S. dollars, right? What does the U.S. government do? They stick the FBI on them, they put them in jail.
Yeah.
Right, so that is violence.
Yeah, but they fundamentally trust the government to solve their problem for us, right?
Yeah, it is trust, but you built that on violence.
I got you. I guess. To me, I feel like it's almost like violence is part of the government, right? And then the people trust in money, not because they trust in money, they trust in the government. And then trusting the government to use the violence to do whatever they want, right? Like the king back in the day, they punish, you know, if you counterfeit, they're gonna kill you, and that's why it's a you know, almost like death sentence, right? So if you counterfeit coins, right, back in the day, like Roman Caesars, I guess, right? So,
right. Anyway, so if you look at back in the day, like how did coins start? Right? It's usually because the king wants to raise an army, And the way that they can, house and clothe and feed an army is through the issue of coins to the soldiers, and then demand taxes in the form of those coins. And so your population then has to provide services to the soldiers to the point where they could collect enough coins to pay back in taxes. And if they don't pay taxes, then of course you put them in jail.
So I guess the violence point is the strength of the currency is kind of correlated to the strength of your military in a way. Yeah.
So you're saying some of the earliest currencies were basically only for the economy of providing for the military. Like what people exchange with each other was irrelevant. It's just about you need to do X number of provide X number of goods or services to soldiers, and then you get the coins and you can pay your tax, which is just a record of saying, yeah, you did this much.
Right. It's like, what's the alternative, right? It's like you would have to be like this, you have to say every family, if you're growing wheat, if you're producing like clothing or like armor, like you have to say you have to provide. It's like an incredible amount of micromanaging you would have to do otherwise, versus just say, oh, you have to provide so much taxes in the form of coins.
All right, that's good. All right, anything else on the Bitcoin cryptocurrency money thing?
I don't know.
We good?
You gonna buy more Bitcoin, Shu?
That's good. Probably if it falls again. I don't. Yeah, I need to. I guess I'm starting to try to learn a little bit more of it. Then if I try to learn more, and then I guess based on how much I learn, how much I understand, right? And then I will see what I can do, right? I mean, as Warren Buffett and Charlie Munger says, don't invest in anything that you don't understand. Right, so that's what I'm trying to do right now. Try to understand the basics, and then to get more understanding. And then if I still don't get it, I'm probably just not gonna invest. I mean, I can still buy a little bit, right, as almost like gambling. But I mean, investing a little bit is also to learn about it, right? So yeah, like put $1, $2 in Robinhood, that's fine, right? You're not putting all your 100% of the asset into Bitcoin, and you should be good. Yeah. Yeah. Every time it drops, I just buy $3. That's all I have, because that's all I have.
Wait, $3 of Bitcoin?
Yeah, $3. That's only money I have. I don't have like $10,000 like you guys. So
can't buy a whole Bitcoin.
Yeah,
that's too much.
Yeah. So anyway, I think, as I said previously, my mistake is not investing in Bitcoin early. The mistake is not to learn about it, right? To study it, to understand it a bit more, and that's basically that's what I'm trying to do right now. Yeah.
So I want to summarize the conversation we had. So if Bitcoin has no threat of military violence behind it, does that make it more of a Ponzi scheme than money? I mean, if money is largely secured by like a military force or government power that provides some sort of consistency to its value, Bitcoin doesn't have that. Does that mean it's more like a Ponzi scheme than money?
But I mean, think about how we value Bitcoin. It's in terms of US dollars.
I mean, but everything, you can attach anything's value to US dollars, right? Does that make a difference?
So you're saying that if there's no violence behind it, are you saying it's a Ponzi scheme? That's what you're saying?
Yeah, I'm basically just wanting us to summarize. Do we think Bitcoin's a Ponzi scheme that will eventually blow up and be worthless? Or do you think
I think that's independent of the violence, right? Because Bitcoin is built on top of the existing civilization.
Yeah.
So Bitcoin is basically like any other Ponzi scheme.
Well, going back a little bit, I mean, like money fundamentally is still just trust, right? Even if it's violence involved, but it's still trust. Or just trust in the government, right? Even the government use violence or not, right? So fundamentally, at least I guess it helped me understanding what money is. It's just trust, basically, right? I mean, I guess you could add a little bit of violence into it, but fundamentally, I think the majority of it is still trust. So yeah, and that's I guess that's how I would summarize. I mean, there's anything that you take away. That is the main takeaway.
Yeah, I think the question of like, will Bitcoin blow up? Like you said, Shu, it's a matter of trust. Like, will people continue to believe in Bitcoin? Or rather, will people continue to believe that other people will believe in Bitcoin? Which is just the same thing as GameStop and Tesla and any other of these like super accelerating stocks. It's just it's a mind game, right? Like, do you think that other people will keep buying this? For stuff like Amazon or Tesla, it's the promise of growth, right? That they're gonna keep expanding, that they're only at 1% of the market right now. They can keep expanding to encompass more and more. And so other people believe that, hey, like there is strong future growth and security for this company. I will keep buying it. And
that's why when Tesla bought $1 billion of Bitcoin, the value just shoot up, right? So I think as time goes on, I think a lot more institutionals like banks and stuff, they probably gonna get into the game as well. So, but yeah, I mean, it's a bubble. It might pop, right? But it might come down to more reasonable. It's gonna probably might stable into a reasonable value, like gold, right? So it's a basically store of value, right? It could go down, but it's probably not going to go to zero, right? It's not going to be valueless, right? So
yeah, I mean, I've been pretty critical of it, but I do think Bitcoin will hold its value for a really long time because there is a finite amount of it, and the population's still growing for right now, and the number of people who have access to do something like buy Bitcoin is continuing to increase. So arguably, you have a finite thing, and the number of potential buyers is going to be going up for decades at least, right? So I think based on that, you can probably say this is going to hold value for several decades more.
Yeah, that's why I like buying Coca-Cola and Disney, right? Because Coca-Cola, even though right now it doesn't grow as much, every day there's new babies being born, right? And then when they grow up, what are they going to drink? It's not Coca-Cola. Or going to Disney World, right? So
that's one way.
Yeah.
I just want to tell our listeners you should not give your babies Coca-Cola. It is not advised. I'm not a doctor, but I am comfortable saying that.
Yeah, we are not doctor and we don't play one on TV. No, we're financial advisors. We don't play one on TV. So, yeah.
All right. Well, C, since you were the guest, was there anything else you wanted to say about your book or any other exciting topics or opinions you wanted to share?
I think I said my piece. Yeah.
Would you recommend other people read? What was the book's name? Debt?
Debt, the First 5,000 Years. I think it's by David Gruber, something like that. He just passed away recently, but that book really opened my eyes into like what money is versus just like the common sense idea of what money is. I think there's a big discrepancy that people don't realize.
Is it long?
It's not too long, and it is like from an anthropological perspective. So he digs into the history and documentations from different nations across time and how their account of credit and money, and it's very counterintuitive what you find.
So, from after reading the book? How did you change your opinion on capitalism?
Capitalism, not so much. More so just the value of money, right? Like there's a common idea that, oh no, U.S. is in debt, and we need to pay off our debt, right? But really, debt at the nation level is very different from debt at the personal level, because debt is, there's two halves to the accounting book, right? There's the debt and there's the assets. If you want more money to exist, then you have to create more debt. And like I said before, the value of the world is increasing, so you want more value, more money out there, going through the circulating through the economy. And the only way to do that is to create more debt. And so it's actually beneficial, I think. After reading the book, I've been convinced that is a good thing.
Another way looking at debt is basically to credit, right?
Right. It's the other side of credit.
And credit is what runs basically the economy, right? Because there's a limited money. You can print limited amount of money in the supply, right? But you can almost do infinite amount of credit, right?
Right. So the flip side, you can think of it, is that the more we pay off our debt, the less money there is to exist circulating in the economy, which hurts the economy.
So debt is good for the government to have, but it's bad for a personal to have, basically.
Yeah, like there's a saying, like, if you owe someone $100, they own you, but if you owe someone $1 billion, you own them.
I've heard that.
Oh, really? Wow. Nice.
All right, hold on. We got to go back one thing. Shu, you didn't share the most exciting part. So you're skeptical about capitalism? C?
Not yet. Not really. No.
Not Shu. Sorry. The question was to C.
Capitalism in terms of, like, what do you mean?
I guess I was going to say, like, are you like, a socialist, or do you like agree with, like, there are some people who like go along with Karl Marx teachings or things like that, or like, we should try to reform the economic system away from capitalism to something else. I didn't know how far you took it.
I guess, like, if you're talking about capitalism as a system of distributing or allocating resources, I'm not a fan of it, but I don't know of a better system. That's my opinion.
That's a pretty fair opinion.
The better system is socialism, of course.
Yeah.
Hasn't worked out so well, but no, that's okay. I'm hoping that one day Mike says he has a lot of socialist friends on Facebook, so I want to bring him on so we can have, that sort of opposite opinion, because I'm fairly pro-capitalist, but Mike and Shu agree at least enough that, we often agree on similar things. We're educated in a similar way, so we kind of have, similar thought patterns, but I always hope to meet like a real life socialist and be like, I want to chat with you. Cause you can find them online, right? But internet discussions are always terrible. So it's like, I want to have like a one-on-one with one day.
Yeah. There's what I believe in is that, like, the market drives for short-term benefits, and you do need government to play a role of, like, seeing longer into the future and, biasing the economy towards that.
Yeah. Oh, no, I'm definitely agree. Like the whole like laissez-faire, like let the market do whatever it wants is not smart, but capitalism and the market's a really great tool for a lot of things, and you should use it as much as you can. But obviously there's some things it's not appropriate for. I wouldn't consider myself extremist, but yeah. What are you going to say, Shu?
And I was saying that's not a problem of capitalism. Like the market is focused on short term. That's how to design the market right now. The stock market, right, is focused on short term because the shareholders want to drive up the stock price, right? So that's what happened to actually an economic called, I think, Milton Friedman. He actually got Nobel Prize for it. Say the company, the business, whole responsibility is to their shareholders. And then for the past 10 years, like 20 years, then the company basically, all the business just took it and ran with it. So that's why you tie the CEO's pay on the share stock price. So what they do, So what happens when you tie the CEO's pay to stock price, right? You're gonna try to drive out the stock price, ignoring the long-term benefit. So it's not the capitalism that is doing that. It's how we design the market on a system to how we implement it, basically, right? So so right now, like recently, like 10 in the last few years, actually, a lot of companies like Amazon, on its big company, actually try to come up with a different framework. So instead of only companies should focus on shareholder values, they actually gonna focus on, they sign some kind of like a letter or something to say, oh, we're gonna start focusing on stakeholder values, not just shareholders. So stakeholder include customers, so that and everything else, and that kind of try to force them to focus on the long term, right? So anyway, that's just something that I learned about recently, that about why people are doing short term stuff, right? Yeah.
Mm-hmm. Yeah. Well.
Then let's just point out. Anyway, go ahead.
I mean, that's kind of a general thing. You can think of it like an investor's sort of like, they want their stock prices, but in more general, sometimes you'll hear people be like critical of things like businesses are only seeking profit, and not what's, say, good for society overall. And that's really when, the government can step in to, set the incentives to be the right incentives. I'm a huge fan of a carbon tax, and it's a pretty simple idea. You make people pay for the amount of carbon they, release into the atmosphere. And that basically puts a price on this action that creates some environmental damage. And if you price it appropriately, what you can do stuff with the tax money later, like try to sequester carbon back out of the atmosphere. But if you price it appropriately, you're making people pay for what they're doing in the same way that you make people pay, for a trash service to pick up their trash and not just let them throw it out on the road. Right. Anyway, the point it kind of wove off, but I was just going to say that's kind of the government's role, can step in and create the right incentives when, businesses go awry a little bit.
Yeah, agree.
All right. Mike, should we talk about what happened last Sunday on Monday? What happened on Sunday?
What was that, Shu?
Well, your best friend, Tom Brady.
What? Yeah, he won the Super Bowl.
Yeah, you don't sound very excited.
Well, he's not on the Patriots anymore.
Yeah, that's right. No, I mean, it was good for him. It was unsurprising.
Oh, really? I thought you were still following him. Doesn't matter where he goes.
No. I mean, I was rooting for the Buccaneers purely because Brady was on them. But yeah, I mean, I don't know. It wasn't like it's sort of just what you expect at this point.
Do Patriots fans feel betrayed by Tom Brady that he left, or?
I don't think so, because I'm pretty sure it's come out that basically the team was like, yeah, we can't give you like a multi-year contract. You're just too old. We need to like think about the future, and it's time for a rebuild. So yeah.
Probably.
Anyway.
Now they're feeling dumb, aren't they?
Well, I guess. I mean, I don't know that he would have had the pieces he needed here to win another one, but I say here being in Atlanta, but I don't know that he had the pieces in New England to win another one right away. So he was able to get that in Tampa. So good for him. He's the GOAT.
Goat. The deflate goat.
Yeah. Yes. Yes. So, no.
All right. Sounds good. I think that's pretty good for today, this week. Yeah.
No, that sounds good to me. So I felt like
just remember, if you don't remember anything, everything is your figment of imagination.
Junto Club.